Well, holy smokas, folks, this ain't no dang jokers. No one's getting their flapjacks flipped today. Oh, man, the flapjacks are burning. It's nasty out there. I want to explain in this video why stocks are dropping like a rock today. Not a lot of people actually know what's going on here. A lot of people are trying to pin it on just one thing. There's actually literally 4 things going on today that are a huge deal. And I want to explain exactly why this is causing stocks to drop in a meaningful way. Believe me, you don't get these type of moves without there being multiple things usually going on, okay? And so I hope you guys enjoy this video. As always, I'll ask in returns that you smash that like button, and let's get into this, guys, and someday we'll get our flapjacks flipped the right way, okay? So first off, let's look at the destruction before we get into the 4 reasons why stocks are dropping like a rock today, okay? So, I mean, you know, there's obviously a lot of destruction in big tech. Not super crazy, but, you know, these are some pretty big moves down, right? 2.44% for Amazon. Tesla's down about 2%. Facebook's down 3%. Google's down 3%. Keep in mind, when these type of stocks are down like this, we're talking tens of billions of dollars, if not, you know, close to $100 billion of market cap is lost for some of these stocks because they're such big companies, okay? So it's not like it's small numbers at all. Corsair! Corsair. Oh, it doesn't matter what happens with Corsair. Market goes up, market goes down, market doesn't do anything. The stock just goes down. What is it with this stock? Oh my gosh, okay? Yeah, Corsair down 3.47% today. I mean, soon it'll be at a forward P of like 1. You know, it's insane. But, you know, that's Corsair right now, and it's just part of the destruction here today. Smile Direct Club, look at this one getting hit today. Ooh, slapped with a negative 7% plus move here today in regards to Smile Direct Club. Now, something to keep in mind when it comes to SDC Smile Direct Club is this stock was $4 and some change just a few weeks ago, so it had been moving up. But yeah, I mean, a day like today, no bueno for the Smile Direct Club. Palantir! Oh, Palantir down 6.5% today. Not a great day for sellers out there, but buyers, hey, you know, Palantir 25. Some folks love it in the 25 range. So stocks getting absolutely hit today. They call this one, no one really calls it this. I'm just going to call it this, okay? It's the Tesla of artificial intelligence and data, okay? Now it sounds super fancy. But Palantir, I really like the company. I own a very small position in it. I wouldn't mind it to continue to go down. I would love to make this a bigger position ultimately. But when it comes to Palantir, yeah, just getting absolutely devastated here today with that one. Voyager! Oh, Voyager. This is kind of like a Corsair, just a much... more painful version of Corsair. Voyager Digital. This stock, on up days, it goes down. On down days, it gets destroyed. On regular days, it goes down. Like, this stock just can't get out of its own way right now as far as the stock price goes. $9.62 here today. I might have to buy some of this one before the end of the trading day. I still got about 28 minutes, so I got to get done this recording within the next 28 minutes and maybe pick up some shares. Because, yeah, I mean, that stock, it's insane. You know, you look at the growth rates of it. You look at what is expected for EPS for this company. You look at the things that they're working on in the pipe, and just none of it matters. Like, literally none of it matters right now for that stock, and it just goes down, it seems like, every single day right now. Kind of like a lot of these small caps in general and some of the mids as well, okay? You look at some of these stocks that had been really hot stocks for quite a while. You look at Revolve, you look at Upwork, you look at Shopify, all those stocks down 4% plus here today. Just vicious days. And I think this is why it's important to look at individual stocks rather than just look at the Dow, let's say, or the S&P 500 on a given day. Because what you're going to find is, man, there's a lot more pain out there than I think a lot of folks realize if you're just looking at the Dow and S&P. Because what we're seeing is countless stocks down 3, 4, 5, 6, 7% here today alone, okay? The chef broke that 19 range. Oh, man, it had been holding strong at 19 plus. You know, they've been trying to move it down, but they've been holding it strong and just couldn't hold it today. And it broke under that 1870. here today in regards to the chef. And by the way, in regards to the chef, I had something delicious today. I never tried this one, but I tried it today. The Huevos Rancheros Bowl. I got this one at Sam's Club about a week or two ago. Dang, that one's good. That's probably my favorite outside of the plant-based burrito bowl and maybe the enchilada bowl. That one's probably my favorite. That one's delicious. It was so good that even my kids liked it, okay? That was kind of surprising. Needs-based stocks. Look at this. This is very intriguing, okay? Needs-based stocks here today. Not doing bad at all, right? Honest Company down less than 1%. Pfizer down less than 1%. Walgreens Boots Alliance down less than 1%. Switch, data center company, down about 0.5%. So isn't that very, very telling on a day like today? We got this company sells beauty products, diapers, wipes, stuff like that, needs-based. Obviously, we all know Pfizer, okay? Walgreens Boots Alliance, pharmacy, and a data center company. Needs-based businesses on a day like today are far outperforming the market. And so being that I have, obviously a massive position in Walgreens and then, a building position in Honest Company, I feel pretty good about at least that part of things, right? That, these needs-based plays are holding it together pretty darn well, okay? Now, crypto, not having a great day, but that's it's not like crypto's getting destroyed today. Bitcoin is in the 41,000 range here today. Obviously, ADA is down, and then Ethereum's down as well. So I always tell you guys like a second proxy if you want to look at something to kind of tell like what the risk appetite is for overall the finance community. Look at cryptos as well, and if cryptos are usually doing bad, that usually means people aren't looking to take much risk, right? If cryptos are doing great, hey, there's obviously the risk appetite is out there. Okay, now like I said, there's a multitude of reasons why stocks are getting absolutely slapped today in a massive way. And let's get into all those, and I'll give my perspective on each of these and what I think is about to happen in the market from here. So first off here, Senator Warren, Elizabeth Warren, calls Fed Chair Powell a quote-unquote dangerous man, says she will oppose his renomination. Senator Elizabeth Warren charged that Fed Chairman Jerome Powell has led an effort to weaken the nation's banking system, and she will oppose his renomination. In remarks made during a Senate hearing, the Massachusetts Democrat cited several instances where she said Fed Powell, or Powell Fed, has watered down post-financial crisis bank regulations. Okay, Powell did not respond to this. Okay, Mr. Burr, as we call him. Listen, Wall Street likes that man. Wall Street likes Mr. Burr, okay? And if all of a sudden we have folks saying, no, get rid of Mr. Burr, I don't know how much Wall Street likes that. Not to say Wall Street doesn't think somebody can do a good job and, things like that, right? It's just more like I think Wall Street really likes Powell. And so when you get something like this coming out from somebody that's extremely vocal, like Elizabeth Warren, it's going to definitely make Wall Street say, okay, what's going on? Is this a situation where, Wall Street could be in danger if somebody more on the side of Elizabeth Warren gets in there rather than somebody like Powell? So, that's definitely affecting the market in a major way today. That's a huge headline, okay? Next big thing. Top CEOs say they're worried about corporate tax hikes as Democrats push bills, okay? Now, keep in mind, there was a huge benefit to the market that happened a few years ago. And I understand people that maybe just came in the market in the past 12 to 18 months. You weren't around to kind of, witness this. But corporate taxes got, lowered in a massive way a few years ago. And this helped out corporations in their profitability in a massive way. Basically, corporate taxes were at 35%. Then they got lowered down to 21%. And this was something that was a huge boost to the market during that time period, okay? And it was something that benefited, obviously, corporate earnings in a massive, massive way. Now, if all of a sudden you're talking about potentially taking that away, obviously, that's something that fundamentally hurts the market, right? If, let's say, just overnight, we were to take corporate taxes from 21% back up to 35%, immediately the stock market has to come down 10 to 15%, if not more than that, overnight, essentially, right? Now, I don't think they're going to go from 21% to 35%, okay? But if that was to happen, like literally the market has to drop 10, 15, if not 20% the next day, essentially, right? Obviously, it would happen over a period of time as it begun to get more realistic. I think there's a lot of talk that they could take it to 24% or 28%. and some folks are thinking even 25%, okay? Once again, we'll have to see what happens there, but needless to say, this is absolutely something that, it should be a real fear out there just in case it happens, because if Apple all of a sudden gets a ton of their profitability taken away and they have to give that to the government, right? And Amazon has to do that, and well, Amazon, they find ways not to pay taxes, but Google and Facebook and Microsoft and those sorts of companies, right? If all of a sudden overnight those companies are in a situation where, they're getting far less profits, really hitting that bottom line because they're paying all that tax money, guess what? That means the PEs on those stocks go up, which means that what people are willing to pay for those stocks goes down, okay? Very important there. Not a lot of people are talking about that, okay? Now, everybody wants to pin what's going on in the market today on this thing right here. So the 10-year yield continues rapid climb, hits the highest since June. The benchmark 10-year U.S. Treasury yield rose again on Tuesday, trading at its highest level since June and continuing a steady increase that began last week. The yield on the benchmark 10-year Treasury note was up 3.6 basis points. So that sounds like a huge number, right? 3.6 basis points. Oh my gosh, okay. We'll talk about that in just a minute. To 1.52% in midday trading after hitting 1.558% earlier in the day. The yield on the 30-year Treasury bond at 7.6 basis points, sounds massive, spiking to 2.071%. Yields move inversely to prices, and 1 basis point is equal to 0.01. So first off, like folks that maybe aren't familiar with the market here, 3.6, 7.6, it sounds like a really large number. It's just not, okay? Also, something very important to keep in mind here is, in the simplest terms possible, the more yields generally rise, the less people or investors or Wall Street are usually willing to pay for stocks, okay? Now, that doesn't mean it's right or wrong. That's just like usually how this game goes on a general basis, okay? Now, me personally, I think this is a very, very small part of why stocks are falling today. I think it's a lot because of these other reasons we're getting into. I think this is just playing a little factor. Because look at this, okay? This is how much, like, the 10-year has gone up, 0.057%. Oh my gosh, I got to sell everything in sight. Oh yeah, Palantir deserves to be down 6.5% today because the yield changed 0.057%. Yeah, all these stocks deserve to be down 6-7% because the yield went up 0.057%. Like, give me a break, okay? Like, come on. Like, that's just a joke, right? And so, in some way, it does affect stocks, but I just don't think it's nearly as big as some people make it out to be. I think a lot of the reason why some of these stocks are falling huge today, and just stocks in general are falling huge today, isn't just this. I think this is just a very, very small factor in this, essentially, because when you look at how much these numbers have changed, it's extremely, extremely small percentages. Like, I can tell you it's not a big difference between, 1.54% and 1.53%. I can promise you that. It's just not a massive difference there, okay? Then you have this. Federal Reserve Chairman Jerome Powell, in prepared remarks delivered to the Senate on Tuesday, today, warned that higher inflation may last longer than anticipated. Now, we know inflation has been hurting a lot of companies' profitability. We know this, right? Powell began his testimony to the Senate Banking Committee at 10 a.m. Eastern on Tuesday. In the prepared speech, he said that economic growth has continued to strengthen, but has been met with upward price pressure caused by supply chain bottlenecks and other factors. Quote, inflation is elevated and will likely remain so in coming months before moderating, Powell said. Last week, the Fed indicated that it may soon begin pulling back its asset purchases. The central bank's updated economic projections also showed that half of the major Fed officials now see a rate hike in 22, okay? So now they're talking about rate hikes in 22, which was something I've always said was likely coming. They've always talked about 23. I'm always like, okay, we'll see about that. I think 22. And obviously, when you're talking about pulling back asset purchases, when you're talking about, inflation being higher for longer, those things are going to affect the market and the psychology around the market and what hedge funds and the funds in general are willing to pay for stocks, right? And when you have all these, things compounding all in the same day, it absolutely affects the market and affects the market in a negative way, right? Then you have this. Amazon launched a robot today, which, between this and, the Tesla bot, I mean, you know, it's not looking good for humankind, okay? We're in some trouble. That's all I'll say about that, okay? Now, I want to explain this like this, because you're seeing all this come out and things like that. And I want to talk about what I'm expecting in the market here, okay? So now, if a group of stocks or stock in general goes up way, way too much, and you're looking at that stock and you're like, man, that's a bubble. There's just crazy trading activity in that stock right now. That stock's a bubble. That group of stocks is a bubble, or stocks in general are a bubble, right? And you're just watching it go parabolic, and you're like, it's out of control. You know that there's going to be likely a vicious down cycle for that stock or that group of stocks or stocks in general, right? And then you don't know when it's going to happen, right? You don't know if it's going to be tomorrow. You don't know if it's going to be next week. You don't know if it's going to be next month. You don't know if it's going to be 3 months from now, but you know that there will be a vicious down cycle for that stock or that group of stocks, right? Now, on the flip side, when we see what's going on with mid caps, small caps, and a lot of those stocks valuations are already very pushed down. We pulled up a ton of charts yesterday looking at Yardini Research, right? And we saw a ton of mids and smalls are trading at, you know, some of the lowest valuations they have traded at in a long time. What you know is as those get more and more pushed down, they're setting themselves up for a vicious rally on the upside, okay? And just like when you can expect a vicious down cycle, when stock prices get sillier and sillier when they're being pushed down, you better be ready for a vicious up cycle, okay? And so that's what I foresee with mids and smalls. The problem is no one knows exactly when that's going to happen, right? I don't know exactly when that's going to happen, if it happens tomorrow or next week or next month. But there will be, in my opinion, a monstrous rally in smalls and mid caps and a lot of these beaten down dog stocks that have just continued to be kicked and rubbed in the dirt. And when that rally starts, it's going to be likely a multi-month, if not a year-long rally that will be a beast. And that is the way the stock market works. Some stocks and groups get way overvalued and they have to come down. Remember what happened back in January, February. Tons of stocks and groups of stocks were getting massively overvalued, and those stocks needed to come on a vicious down cycle, right? And we saw a ton of those stocks drop, 50%, 60%, 70%, 80% from their highs. That needed to happen. And now I'm looking at so many of these mids and smalls that are just continuing to be put in the dirt. And just like the Undertaker, they're about to come out the casket. Hope you guys enjoyed this video. As always, much love. Don't forget to smash that like button if you didn't already for the YouTube algorithm. I appreciate all you guys being here. As always, let me know what any stocks you guys are buying out there. I got a bunch of links in the description for all types of free, fun stuff. Check it out. Much love and have a great day.